Hey, I wanted to do a quick video today and share with you my thoughts on this stock, DGLY, DGLY, that's kind of gone crazy the last couple of weeks. I was on vacation and I saw that this stock started to kind of take off and posted a video. We talked about it from the morning meeting. We talked about the risk of it being trading it on the short side. So kind of want to go through a few things here. Maybe this will help you out in similar situations in the future. So number one, there's stocks that you can short, and there's good setups for shorting stocks. I short stocks every single day. Generally, I have a book where I am holding some short positions. Number one, I like to short stocks that are in downtrends. Definition of a downtrend: sellers are in control. Those are good short opportunities. Another one, recently, I'll give you an example, LVS got below key support a couple of weeks ago, around $70 a share. Had a catalyst, slowdown in Macau, good short opportunity. I'll even short stocks that are really strong and that have been in uptrends, that they go vertical and they have kind of blow off type tops, or they get extended on their uptrend for that quick down move, and that's fine as well. But there's certain situations, for whatever reason, people like to short them that are not particularly good risk rewards on the short side. And there are these, here's some examples. It's up a lot. The stock was a $2 stock, now it's up 5, it's 7, it's 9, it's up a lot, I'm gonna short it. Or I think this is bullshit. You hear this on the desk, this is BS that this stock is up. Usually when somebody says that, or you hear that from people, they're emotionally invested in this idea that it's wrong what the market is saying, and I'm going to get short this thing, and I'm going to prove the market wrong. Those are the ones where people blow up their accounts usually. I think it's going to go lower eventually. Short-term traders, it's not good enough that it's going to go lower eventually, because your account is going to be wiped out before that happens. So let's get to today's stock, DGLY. Here's the from Yahoo Finance. Here's the profile on the company. They produce digital video imaging equipment. They sell to law enforcement. So why did the stock all of a sudden go from a low single-digit stock to $32 a share today? Well, the biggest story in the US over the last few weeks was the shooting in Ferguson. There was a shooting, someone was killed. There was no video of this incident. And so now there's this push. Should law enforcement throughout the country have cameras, not only to protect civilians, but to protect themselves? So there's a documentation of these incidents, and we know we can go back and say, hey, what happened here? And there's DGLY makes cameras. Another one is, what's that? The other one, that the Taser. Taser actually makes the digital equipment as well. We saw Taser kind of took off as well after this story became pretty big. And so we have this possibility that all law enforcement throughout the country eventually, they're gonna eventually have cameras. I mean, we already have the civilian population 90% with smartphones, right? And so they're filming everything. Why not have law enforcement, film 100% of what's going on out there? Could be a lot better for our society. And so from a trading standpoint, when you have a company that has 2.7 million shares outstanding, meaning any small hedge fund literally could buy up the entire float, that's why it's so dangerous. And that's why I was tweeting about this idea when it was $10 a share. I mean, a small hedge fund could literally buy up the entire float, and that's no joke. And so that was risky at $10, $12, $14. Some people got away with it for a little bit. It had $2, $3 down moves. But when you're shorting it like today, you come in and you see it at 20, 21, 22, you don't get away with it when it goes to $32 a share. You get wiped out. So here's a picture of the 30-minute view. For me, this did not come on my radar until $7 a share. And what I do in these situations is I look at the story, I look at the float, and I say, hey, okay, some people, some traders, some people in the know are cause this thing to go to $5 to $8.70. What I'm going to do is look for that second wave where it goes from 870 to 15, and then that third wave when it goes from 15 to 25, or in this case, 32. I was thinking maybe 24, 25. It went up another $7 from what I thought was reasonable kind of upside. But again, with a low float, anything is possible. And so from a trading standpoint, how you want to trade this is it's on your radar once it goes on heavy volume from $5 to $8, and then you look for it to base and take out the prior high, and you look for that second wave. The first wave was from $4, maybe the second wave is $4 to $6, and then the final wave is a little bit bigger and you get your blow off top. And that's a picture of the 30-minute there. You can kind of see it's kind of gone vertical now. I've made this point before. Someone asked me before I made this video, talk about this idea that percentages don't matter in low price stocks. And of course, this went from a low price stock to not a low price stock in about 2 days. But the idea is when a stock is $1, $2, $4, $5, when momentum players are pushing them around, they don't say, wow, it's up 30% now from 3 to 390, I'm not going to buy it anymore. They think in terms of dollar moves, like I'm buying it at 3, I'm going to push this to 6. It's not until a stock gets to around $20 a share where you start to think in terms of percentages. And with a low float stock like this, even at that point, you might not think about it. And so it's the same thing with people when they make their options trades. Oh, the option went up 50%, I'm up 100% of the options. It's silliness. Let's focus on the dollar moves, how traders are viewing it, not the percentages that kind of make you feel better that the move is over or that you made all this money. And so let's think about learning how to get long these situations, because ultimately stocks can go up. In this case, the stock went up 300-400% in a few days. They can't go down that much, right? By definition, they can only go down 100%. So hopefully this helps you in the next go round. Certainly we know these situations don't happen every day, but in a raging bull market, there's been plenty of these low price stocks that squeeze up. And there's a lot better shorting opportunities out there from a risk reward standpoint. Thanks.